Hey, everybody, this is Brian Carmody, co-founder of Property Nirvana, here with my partner in crime, John Matheson, who also helped create Property Nirvana into what it is today. We are excited to have the Vice President of Marketing from Fund That Flip, Kendall Bazan, here today to help us understand what does Fund That Flip do, why are they unique in the marketplace, and why you guys as investors need to know about them. Kendall, thanks so much for preparing a few slides for us. And I think the visual aids are awesome. So I appreciate you doing that. Let me just let you start off with, who you are and who Fund That Flip is, and let people get to know you.
Awesome. Thanks, Brian. And hello to you, John, as well. And hello, everybody. Super excited to be here today and share a little bit more about what Fund That Flip does for actually two sides of the marketplace. So actually, let me start off with our disclaimer slide. So we don't make investment recommendations, blah, 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 talk to your lawyer. This is all the good stuff that we can get past so that we can talk about real estate investing. So Fund That Flip, what are we? I mentioned the two sides of the marketplace, and I think it's an important distinction because in real estate investing, both people that are actively investing and people that are passively investing in real estate refer to themselves as investors, and rightfully so. So we cater to both sides of this marketplace, all real estate investors. So on the one side, if we get a little bit more specific, we provide market-leading financing to real estate sponsors. Those are what you might refer to as active investors, borrowers, redevelopers, flippers, people that are doing the projects they are executing. We give them that financing, fast funding, high levels of service. You can see kind of all the funding products that we have available today. So our name, obviously our bread and butter is fix and flip, but we also do turnkey, we do new construction, fix and rent. And for those redevelopers, it's really the speed and the reliability that they come to us for. Yep. On the other side of the marketplace, also investors are the passive folks that we really unlock that asset class of real estate investing at a scalable level that they can invest in passively. So these are accredited investors, hedge funds, institutions, family offices, insurance companies, kind of spanning the gamut of all types of passive investors that want to get real estate into their portfolio as easily as they can invest in stocks. So just to kind of run through the benefits on that side, and we'll dig into this a little bit more deeply because this is where I really want to focus. Again, being able to access investing in real estate at a scale that has really heretofore been inaccessible. So we provide really low investment minimums between $1,000 for our fund products, $5,000 increments for some of the individualized projects investing in. These investments provide monthly distribution. They're of a really short duration comparative to a lot of other asset classes that you're looking at. And really attractive, we believe attractive returns. So 8+% unlevered, and these are investments that are secured by first position mortgages. And really, yeah.
Sorry, can I just ask you there, because this is a great point. Is there, there's no obstacle for anybody? You don't have to be an accredited investor, even though it's a low minimum. Is it truly open to everybody? $5,000 investment?
So for now, we do require accreditation, and that's actually an SEC requirement based on the types of investments that we offer on the platform. Yep. It's something that we're watching really closely because it's to really democratize real estate. We believe that could be the future, opening it up to non-accredited investors as well. But there is a really big audience of accredited investors that may not know about real estate, as a passive investment opportunity online. So that's really who we're targeting.
For our group, Kendall, this is awesome because I'm an accredited investor. Brian is, right? But we didn't start out that way.
Yeah.
Right. So you have to start somewhere and you have to understand how these things work to get there. And when you look at the left-hand side of my screen where it says real estate sponsors, and I get down to the bottom, express funding and lines of credit for repeat borrowers, I'm jumping up and down in my seat here, right? Because as you start to establish yourself, when you do 1, 2, 4, 8, right? You're starting to get to where you can get a line of credit and you can be treated as a professional. And then suddenly you hit accredited investor status and you can roll returns onto the other side of the platform. And you can be in a wonderful place to enhance your portfolio in property that you understand completely because you're already funding on the left-hand side of the equation.
I think it's such a good point, John. And we actually do find that a lot of our borrowers do become interested in the passive investing side. So they become lenders with us as well. And sometimes they're doing both. And the accreditation, it's something that we look at closely, and it bears looking at the definition, because I know the SEC has recently changed the definition to broaden it to, professionals that may have, what they consider an experienced understanding of investing in certain classes. So, there is a certain threshold now, but it's worth tracking because that definition may change.
That's good stuff.
Great.
Cool. So I'll run briefly through Fund That Flips history so we can talk a little bit more about the asset class and kind of what passive investing in real estate is all about. So just to give you guys an idea, I love this slide because I have to change it every time I look at it. Today, we actually may be even slightly higher than, because this data is as of July. But to date, we've almost funded over almost $1 billion in projects. For investors themselves, we've had 99.1% return of principal. We've paid out almost 40 million in interest payments, originated over 2,300 loans. It's higher at this point, even as I speak, we're closing loans. To date, our average loan size is about 300,000, but really it's for borrowers, it's anywhere between, the $100,000 mark up to several million. And you can even see on our platform, we've got several investment opportunities that are open in the millions. And that's been interesting to track over time too, as that's grown, that average loan size. So net yield, 8.5%. I think our gross yield for investors is 10+%. We've been in business about 6 years. We have 115 full-time employees. Last time I updated this slide, it was 90. So we're adding people by the day. And we have we've returned to investors over 350 million in principal. Nice. Also have our mission statement over there, and I'll run through it quickly, but really it speaks to both sides of our marketplace and both segments of customers that we serve. It's helping them find opportunities to create wealth by investing in real estate, whether it's on the active side or the passive side or both.
Love it.
Cool. So let's talk maybe a little bit about the marketplace for specifically for fix and flip and for new construction, because these are two types of projects that we really specialize in and that we have a lot of opportunity for passive investors. And obviously these are the types of loans that we write. So fix and flip, between 300,000 to 400,000 homes are flipped every year, and that's upwards of $100 billion in value. On the new construction side, that's between 1.1 to 1.2 million homes actually being built every year. And about a third of those are built by local builders. Again, kind of that third, that 300,000 new construction by local builders, that's about another $100 billion, in value. So if we look at the units in need of financing for lenders like Fund That Flip and other lenders that you might be familiar with, that's 600,000 to 700,000 units with an upwards of $200 billion in value.
Man, am I taking notes now, Kendall?
I love the data behind it. Yeah.
This is great. Yep. I mean, it shows all of us. I mean, look, if you can go back to that slide, as anybody in the property nirvana world, right? There's plenty of room for all of us to fit in.
Yes, exactly.
This is not a cornered market at all. 300 to 420,000 homes flipped. You divide that by 50 states. How many is that per state? I can't even do that math. That is a lot of homes being flipped. That is a lot of inventory. Specialized building can fluctuate, and depending upon conditions, that's starting to return to even 08 levels. This is great. Look at that. Look at in need of funding. There's a lot of us chasing money. Look at that.
Yeah, and this doesn't even include, rental and the other types of projects as well. So if we're just looking at these two types of projects.
Yeah.
And so that's what I love about real estate, is that there's enough room for everybody. And so that's why, a lender like Fund That Flip, we do like to speak to our borrowers about, what does their capital stack look like? Or, we might put it in terms of what are your funding sources that you could use for your deals? Because it may not just be a direct lender like Fund That Flip. Having that diversification, which we all know is so important in real estate investing, makes sense on the financing side too. So if we think about kind of the main sources of funding, everybody is probably familiar with private money, friends and family, rich uncle, capital. The pros of this, obviously, it's an easy process. You have a pretty quick close. You can get that cash in hand. You usually have pretty friendly terms when you're working with friends and family. The problem with private money, as I'm sure a lot of active investors know, is that it's finite and it lacks scale, and it can take time, upwards of 50% of your time to manage. So instead of actually executing on your projects, you might be doing a lot of investor relations or investor management. So other sources, local hard money lenders. Our CEO, Matt, always talks, he has a great founding story around when he was doing flips in Rhode Island, he went to a local hard money lender named Gino. So you might know a Gino in your market. Typically, these are small businesses. This is usually, a pretty easy process. It's a quick close. But similarly to private money, these types of local hard money lenders are also of limited scale, and they might not have the types of funding products and definitely, can sometimes not have the service that you might need as you get to scale as an active investor.
And that is not to be minimized, right? God bless Gino, right? He did the deal. But all of a sudden, you're Matt and you're like mid flip and your HVAC guy has a bill in, right? And you're calling Gino and Gino's in the Caymans on vacation. It's like, I'll get you your draw in 2 weeks. And the HVAC guy's like, no, I want to get paid now. Yeah. No, it's really tough. You're right. You're onto something here.
Gino has his place, and
he sure does. But,
yeah, I think to really get to scale, though, thinking about maybe a national hard money lender, that's another option. So these are typically large scale lenders. They have institutions that are backing them with capital. As we talked about, John, this is the way that you can get to scale. They typically, with that institutional backing, can give you pretty competitive rates and terms. But as we're getting into kind of the institutional realm, that closing process can be pretty slow and pretty difficult. It can be
no good, right? We're all about expedience at Property Nirvana.
Time kills deals. So yes,
and a lot of other things.
Deals. Yeah.
Yes.
And banks, same thing. So you might have a local bank, it might be a national bank, they might do some portfolio lending. They typically have those good rates, but if you've ever worked with a bank on anything, you know that the closing process can be pretty slow and pretty difficult. So things to weigh as you're looking at the types of projects that you have, the need for speed to close, et cetera.
Oh, I'll sacrifice rate for efficiency any day, Kendall.
Yeah,
right.
That's what we find.
Because you can sit here at Prime Plus One, which I've been at plenty of times, right? And then it takes an extra 60 days to do it. And I could have taken 10% money and closed and actually been ahead of the curve. And then sometimes you have to mature through the process to realize that. I can sit with other developers right now. We'll argue over the merits of a higher interest rate in exchange for efficiency. And totally. If 10 of us in the room, 5 will fall down on one side, 5 on the other, right? Yeah. So what you're talking about, I'm loving this slide right here. Look at this. This is great.
So yeah, I mean, and in all transparency, John, a lot of our borrowers, they do have that diverse capital stack. Maybe they are using Gino on some of their deals. Maybe they're using cash, but they're also using us. And these are the reasons why. So we talked about speed. Time kills deals. Reliability is another one. That's something that we hear from our customers all the time. They've been burned at the closing table a lot. And there's nothing that replaces that reliability of knowing with certainty that we as a lender are going to show up. Scale is a big one as well. So we'll talk obviously about how we have access to those deep pools of capital, but our having access to that allows us to provide a mix of funding products and really that ability for our borrowers to scale. That obviously includes pricing and terms and service. These are the things that people care about, as they're scaling their business. They need that to be efficient and for it to fit into their business model. And I think to complete, kind of that trifecta, let's call it, is service. It's got to be, right? So working with professional people, like if you're running a business, if you're running your business as a real estate investor, you need somebody that understands actually what your business does and is going to be there for you when things inevitably arise.
Oh,
So,
Kendall, in-house servicing for payments and draws.
that's a big one. Yeah.
As you get to know me better with the Nirvana audience, that is right where we want to be.
Yeah.
Right. I mean, we have to think of it as we're being asked for a down payment, which we get. We're being asked for a set of closing costs, which we all understand.
Yeah.
Right. When we have to carry the draw for an unnecessary amount of time because of outside servicing,
Yeah.
it drives all of us crazy because that's the unpredictable part. We can analyze anything. It's property, right? It's numbers, but we can't predict what happens when we're floating capital waiting for a lender return. And when you tell me in-house servicing, now I'm awake. This is great.
Yes, it's been a shift that we've undertaken, and we have an entire customer success team dedicated to processing payments and getting draws out, and actually understanding these borrowers' businesses and their strategies. So our sales team works really closely with the customer success team because they have to understand, what is John's goal on XYZ project, right? And so to be able to have that close relationship and being able to be in contact with your draw processor at the moment that you need that person, we found that's a huge differentiator.
It really is fantastic.
Cool. So that's a little bit about Fund That Flip and why borrowers use us. I want to talk, maybe then shift gears a little bit and talk for the passive investors. And this, again, everybody in real estate that's investing considers themselves an investor. So what are the other types of ways that you can invest passively in real estate as opposed to just completing these projects? So listed out, we talked a little bit before about private money lending. So one way to passively invest is finding the borrowers yourselves, originating the loan, servicing it, managing it. That one way to do that is to work with a local originator.
And that's also one way, Kendall, to lose your blank, and it's 3 words and it starts with an A. Right.
That's one way to do it. Yes.
Yep. Okay.
That does work for some people.
Yeah.
Not super passive, by the way.
Not super passive.
No, it doesn't feel passive, does it, Brian? No.
Yes, that's a good point. Yeah. Second way that we've listed here, so investing in a fund that might offer some type of preferred return, and there's funds out there that do that. Or, obviously, I'm going to say utilize a platform like Fund That Flip. And again, in full transparency, we're not the only one in the space, and we think that there's a place for everybody to invest in real estate. But really, it's unlocking the ability for people to do it at scale. And one way that you can do that is by doing it online with a direct lender like Fund That Flip. Okay. So when you're thinking about investing online, this is kind of, I'll walk you through what you should be thinking about. So this is our process for underwriting, but whichever way you go in investing in real estate, this is what we would recommend. So thinking about underwriting, our core principle in our underwriting and in-house is focusing on the borrowers that are experienced. So this funnel, I'll go through it quickly. Basically, we do a lot of marketing, we do a lot of sales to find who are the most qualified real estate investors that we can provide funding for. And we do that online, and we also do it in person. So a mix of analog and digital. So we can really span, kind of the entirety of real estate developers that are doing these projects. Qualification stage is next. So getting a little bit more into the details on what does their project look like? What does their business model look like? Do we think that this is something that's profitable for both parties? So then getting to the due diligence. This is where, again, our in-house underwriting team really shines. So what we do and what we recommend people to do when they're passively investing in their own real estate investments is detailed examination of the project, of the borrower. So we do everything from third-party inspection, we do a title review, we do a background and a credit check. We do this kind of at multiple stages as well. Really to get through that as in-depth a due diligence process that we can get, that really sets us up to understand, again, the borrower and their project. And from there, we can originate. So the way that we do it, we originate the loan, we perfect it. That's a first position mortgage. Something to look at actually as you're investing in real estate is what position does the originator take when you're investing in real estate. Title insurance, we do property and casualty insurance, and we also require a PG on these loans as well. So that's how we do it. And we recommend kind of taking a similar process, looking at sourcing your deals and potential investments, qualifying the borrower, doing due diligence, and then what does the investment actually look like? I'll run through these quickly too, but this just kind of gives you a little bit of a more detailed view of what our underwriting standards are. Again, this is actually a pretty high level overview. We have a 40-page document of what our underwriting standards are that our team goes through when we look at each and every borrower. But on the, if you're looking at a borrower and looking at investing with them, what should you be looking at? Seeing if they have like-kind experience, again, looking at their background report, their credit report, what are their financial states? What's their financial state? How much liquidity do they have? Are they willing to put up a PG, et cetera? And then for the project, similar things. So looking at the profitability, kind of running, John, to your point, running the numbers. What are the different scenarios that might play out? How much skin in the game are they bringing? Thinking around these numbers, may change depending on the market or the geo that you're looking at and kind of your risk tolerance. But thinking around, what's your loan to cost ratio? What's your loan to ARV? We also take a look at a lot of proprietary internal and risk data that helps us come up with our own internal valuation. And again, we also look at third-party valuations, which is something that passive investors can do on their own as well. And again, just kind of thinking about what's your risk management going to be after you've invested? What's the project look like throughout construction and through to completion?
Kendall, can I ask about under borrower qualifications, the like-kind experience? If you could just elaborate that on that a little bit. A lot of my beginning investors usually get hung up on this. So you're talking like if I'm brand new and I'm coming to you and I want to do a fix and flip.
No, she's talking about investing. You're on a different page. Yeah. Right. So you and I are the investor now. Yep. And this is how they're scrubbing the borrower. So they're basically a capital company. They're not as bad as a bank. Yeah. Right. In terms of grinding out, right, due diligence and that kind of stuff. Yeah. But this is a typical capital company stack, which is very consistent with what you would want as an investor. Yep. Because the capital companies get us a better return than if we wanted to buy bank stock. So this is really cool. I mean, I'm glad that you guys do all of this on that side, because most investors, it's a challenge to take the time to do all this. Right. So, and we do a lot of this ourselves. I personally love being the lender, and I'm grinning ear to ear here because I see what you guys are doing, and you're underwriting that borrower, and then you're the lender. I love that. That's great. Mm-hmm. I can see why you make return.
I think the other point here too, Brian, and to your point, is that like if you're a newbie that's coming to us that may not have a fix and flip under his belt, what we would look at is, okay, has this person, are they a contractor? Do they have experience in real estate? Do they have a team of professionals with them that may be supporting them in completing this fix and flip? That kind of thing. If you're looking for a fix and flip loan and you've got those 10 fix and flips under your belt, that again, that's something that kind of expedites that qualification process.
Sure, of course. Yeah. Okay, sure. Good. Yep.
Cool. So we talked a little bit about the qualification process, and also went through, so what are the ways to get into passively investing in real estate? I think let's dig a little bit more deeply into some of the risks. And these are the things that we look at and we encourage all passive investors to look at. And honestly, anybody that's looking to borrow money as well. So, if you're looking at a project that you're looking to invest in, whether actively taking it on, acquiring it, executing, and then doing, whatever you're going to do with it, sell it or buy and hold, right? Taking a look at the project. What is the execution risk? What's the valuation of the project? Do we think that, what are the numbers shake out to? And then finally, liquidity. So these are the things you should be looking at the project level. In addition to that, also looking at the market level. So what is the supply demand balance? Taking a look at interest rates, that's something that we're seeing a lot right now, some fluctuation in the markets, and from market to market, how are those different? And then thinking about, again, like what potentially are the macroeconomic factors that could be a potential risk to this particular investment. So these are the things that our borrowers look at when they're executing on projects. And these are the things that we also try to articulate to our passive investors once we've originated those loans. So we go in and say, these are the execution risks that we've identified, for this particular project. Here's what we think is happening in the market. So these are things that we'll dive into when we present these investment opportunities to investors.
You know what's cool about you guys too, which I like, and our audience will appreciate, that last one, macroeconomic, right? You've been around 6 years, which means you survived COVID. Now, I guarantee this slide was in existence 6 years ago in some form, right?
Yeah.
And none of us in our macroeconomic analysis had a pandemic down, right? As a thing, right?
Yeah,
and anybody who tells me they did, I'm like, no. So and yet, because of how you're doing business, you make it through. And that's really key. And a lot of it has to do with up top projects. If the project is good and it's got a level of liquidity, it's not over leveraged, the project will make it through too. It'll ride the market out. And if there's enough behind the sponsor to be able to demonstrate the ability to survive changing economic conditions for a 12 to 18 month period, right? You really have a solid investment, because we're talking property here. I can go up and touch or jump up and down on everything that you're going to invest in here, right? If we go in the stock market, I don't know what I'm getting. Am I even getting the stock certificate today? No, right? So I mean, it's like, this is really well done. I like it.
It's an interesting, that's a really good point, John. It's something that I've noted too, as we're marketing and as we're trying to find, people that want to passively invest in real estate. It's interesting how real estate gets lumped in kind of with other non-tangible investments or asset classes, like NFTs, right? Non-fungible tokens or crypto. Sometimes you have those three in a row. You have like NFTs, crypto, and real estate. And so interesting, because that's super non-tangible, obviously, intangible. And then you have the tangible aspect of real estate, which we think is becoming more and more attractive for people that want to diversify their portfolio.
Well, what Brian and I are going to be doing a piece on crypto soon, I'm sure, in comparison to real estate and what would you rather invest in. And I can just start from the top and say the real estate market's regulated, crypto is not. Which one do you think is going to change? Do you think they'll deregulate the real estate market, or do you think they'll regulate the crypto market, right? We already know the answer. And when that happens, everybody's return horizon is going to change.
Yeah, true. Well, I guess on that note, let's think about what are the returns though. So we thought about the risks, right, of investing in real estate. What can we look at on the returns? And again, this is the passive side of passively investing in real estate. So what we see, and these are the points that really resonate with our passive investors. The first thing is short duration. Our average payback is about 9 months, and that is definitely a differentiator for our passive investors. They love the fact that they know, hey, this is pretty short term. I'm not going to be tied up in this for 10, 20, 30 years. To the tangibility comment, these are asset backed, right? And secured by first position mortgages. So it's a tangible asset and it's backed by that first position mortgage. And then the yield, I mean, this is obviously something that all of us focus on. So currently looking at 8 to 9.5% annual returns. It fluctuates over time, obviously, but compared to the 0.02% that you get in your savings account, like the 2 cent, interest payments that you get, like this looks pretty attractive to a lot of investors.
Sure.
And then portfolio diversification. So we mentioned it at the beginning, kind of that low minimum investment threshold. So, historically, people have had to invest 50, 100, 500 grand in real estate to really get in. The fact that we can offer these kind of minimum increments of 1,000 or 5,000 is really attractive to people that want to diversify and kind of choose their own investing strategy. And monthly payments obviously tend to resonate really well.
Yeah.
Yeah.
It's the low investment minimum is just a great play for people who want to just get started with you guys and get comfortable with you.
Yeah,
you know?
totally. Yeah, that's a great point, Brian. Yeah, it's like especially if you're new to real estate on the passive investing side. So like, starting to understand what your risk appetite is and kind of what you want your profile to look like, what you want your portfolio makeup to look like. It's also cool because it allows you to kind of pick and choose and figure out the geos that you like. Maybe I like investing in Texas, new constructions. Maybe I'm not so excited about the Boston, or maybe I am. So really enables you to kind of diversify and choose your own strategy.
So let me just stop here just to tell the audience too that we are working together on trying to get your portfolio offerings linked to Property Nirvana, so that the members will have a very quick and easy way right in their membership portal to stay abreast of what you guys have to offer and be able to chime in on these investments and jump into them.
Love it. Yeah. Yep. And feedback, it's something that we value tremendously. And it's really actually informed our product strategy, particularly for the passive investor side. We initially didn't have the fund products. It was something that we developed as a result of our community telling us, hey, we really like being able to invest in these individual properties, but what we really love is that you can make it even more passive and pull together, a fund of these products so that we can, a fund of these projects so that we can invest even more passively. So,
nice.
Cool. I'll go through these quickly, maybe just in the interest of time, but thinking a little bit more deeply about kind of the pros and cons of these particular types of investments that we offer. So fix and flip side, which is again our bread and butter. The pros we believe of these types of projects is that existing structure, you actually have something in place that we tend to think reduces some of that execution risk. Turnaround time can be much quicker, especially compared to new construction. And permitting is something that's big for borrowers, and it's something that is relatively straightforward, especially compared to kind of trying to get something ground up, right? Some of the cons of fix and flip, and we know this will resonate with some people in the audience, is that you run into unknown unknowns. There's always something behind a wall or underneath the floor that you didn't know about, and that's kind of part of the fun of active investing. So that can be a drawback, and as there's a lot of lenders in the space, rates and terms can be pretty hyper competitive in the space. So things to be aware of as you're investing in these types of fix and flips. On the new construction side, as a result of being a new construction, in general, there are fewer surprises. There tend to be higher quality borrowers and operators that are just operating at a different level of scale. It's a different type of kind of developer to a certain extent, might have a different type of qualification. So in that regard, there can be less execution risk. Some of the potential drawbacks, though, is that there's kind of that greater beta in the LTVs and some of that unknown there, right? And as a result of the longer execution and project, it can also require some additional steps for permitting and approvals, and anybody that's worked with municipalities and governments knows that can kind of add to that risk for execution. And then again, kind of on the front end, there is that higher execution just because it's again a new construction rather than an existing structure. So we talked about the risks and the returns. Just to kind of go briefly through what we offer, because I hinted at the fund products before, as well as the individual notes. So these are the three types of investment products that we offer for passive investors. So the borrower dependent notes, as it says here, it's dependent on the borrower. These are the loans that we originate that are the individual projects. And this is really what we started with. And again, as I said before, you can really build your own portfolio by selecting these types of loans that meet your strategy and your investing profile. The two types of funds that we have, these are where you can start to invest with your $1,000 minimum increments. So we have the pre-funding note fund, which you can think about as basically like a line of credit or a warehouse line. you're investing in the loans prior to our syndication through a series note again. So in addition to that, we also have the residential bridge note fund, we call it RBNF, which after we've originated those individual loans, we pull them together, and then investing in this, you're basically putting a series note into that diversified pool. So those are the three types of investment products that we have today, and working on more as we get more feedback from our passive investors.
You guys are really offering so much all under one roof. Love it.
It's the double-sided marketplace. Yeah, it's been working for us. And you know, it's interesting, Brian. I think what I'd be interested in your guys' take on this as well is that a lot of people do have success in real estate, in particular because they have a specialization. For us, it's you know, that's that residential space and getting that sweet spot of the 1 to 4, the 2 to 8 units. And a lot of people say, hey, when are you going to get into mixed use and commercial lending? And, you know, that might be a possibility in the future. But, you know, for now, we really think that kind of that specialization is what enables us to offer both the funding to the borrowers and the passive investment opportunities to passive investors at a really high quality level.
Yep.
So.
I love what you just said. I mean, we're extremely specialized as developers, but yet we've done almost, it feels like everything throughout our career. But then again, it's been 30 years, so that's part of it. But if you don't specialize today, I don't think you make it. Because it was funny, I was grinning ear to ear. You summed up the pros and cons of my argument with the flip side of our business and my argument with the new construction side of our business. And my due diligence forms are 8 pages long with about 80 points to them. And you summarized them in 6 on the pros and cons. and you were so right with all of it. And what you just said about being a specialist. And if you guys are serving that specialist, that we want everybody in Property Nirvana to get good at something, right? You don't want to be a commercial developer and flipping unless you really understand, right? So, I mean, it's like, you've got to be good at something to make that work today. And you really need the financing partner to be good at what you do. So this is really cool.
Yeah, I think it's a great point too. And you know, maybe it is that specialization really helps you get to scale. And once you're at that certain threshold, and then you understand, you can go, okay, now I can start taking a look at a different type of project that I want to execute on. Or, you know, even on the passive investing side, if you have a special, you know, if you decide that you want to just kind of take a look at a certain type of you know, fix and flip, or you want to just take a look at a certain type of geo to kind of get used to investing passively, you know, that can you know, that can be really helpful too. So yeah. I guess I'll run through the summary slide quickly. Just kind of going back to what we talked about before about the opportunity in the market. So, you know, this number is actually probably going up. It's probably outdated since I typed it, but over 200 billion in assets in need of financing. So a large opportunity for kind of enough for everybody, right?
Yeah.
We think that the risk return profile is pretty attractive. You know, again, short duration, asset backed, high yield, expertise is really big. So no matter, again, specialization. So no matter if you're thinking about doing the active side or the passive side, thinking about partnering with people that specialize in that type of investing and that type of real estate underwriting and originating, it really requires that expertise. And that's why, you know, people are looking for more educational content and a community of experts to really draw from. And then, you know, thinking about alignment of interests, you know, always ensuring that there's an alignment toward your success. That's something that we take really seriously at Fund That Flip. And in fact, one of the content series that we have is all of the investments that our CEO invests in. So we publish that monthly so that people can take a look and see, oh, this is what Matt is investing in, or these are what, you know, what Fund That Flip believes, you know, makes sense for their book. And then, you know, again, thinking about the passive and the active options. So private lending, investing in funds, or doing it online. You know, thinking about what makes sense for your investing strategy and kind of figuring out a strategy that might combine both passive and active options.
Well done.
Look, John, I don't know if anybody who talks to Kendall and doesn't walk away with an abundance mindset of everything that's available to everybody is, I don't know if I can help them. I mean,
Well,
there's just so much out there. It's great.
but you're able to link yourself up to a financing expert, which is a company that's able to help you get from, like she just said, what is it as an investor you want to be? What is it you want to be as a property nirvana person? I love that part where she just said to you, putting together a community of like-minded people who are experts, right, Brian? So I knew their nirvana. I could see you lighting up there, because that's what we're all about too, Kendall. It's great.
Yeah.
We're big on trying to help people find their way, get good at something, like John said before. And all the forums, for example, are all categorized by the different types of investing and asset classes that appeal to people, so they can really dig in and get deep on one or two of them and really, get good at something. So this is great.
Awesome.
Well, Kendall, this was a lot of great information. I think by now everybody's got a nice comfort level with you. I'd also like to say I have worked personally with Fund That Flip myself, and they were a fantastic level of service. So I'm
great
definitely
to
going to
hear.
be back.
Awesome.
Yeah,
Awesome.
yeah. I'm definitely going to be back with them, and we'd love to have you back, and maybe we can pick another topic to go a little deeper on something if you like. Sound
I
good?
love it. Yeah.
Great.
That sounds awesome.
right.
Thanks, Brian. Thanks, John. This is good
Oh,
stuff.
this is terrific. Thank you.
We appreciate you. Okay. See you next time, everybody. Bye-bye.